risk has not been priced properly in the sector. And that's just kind of how it's been done with all of the institutional research reports, because what pays for the institutional research reports? The banking fees, the broker fees, and they just want to move this sausage through. So those are the type of items that you see why gold is doing so well and will continue to do so, because the governments and everyone has their hand out, and you got to keep the machine going.
To the Wiggin Sessions. I'm Addison Wiggin. Today I have with me Marin Katusa. He's a friend to the show. He's been here a couple of times. Marin is the founder of Katusa Research, and he's also the author of Rise of America, a best-selling book on his experiences working in commodities markets around the world, and why he thinks America is the best place to formulate contracts and make money. Marin, welcome back.
It's my pleasure. Good to be here.
Why don't you start, just to get the conversation going, why don't you start with a review of the thesis of the Rise of America? It's kind of contrary. I like to say it this way: you're like a contrarian to the contrarians.
Correct. So, but yet not with the mainstream. So, right. Let's put it this way. One of the most successful concepts ever is someone you and I both know really well. But when Porter came up with the end of America in 2010 and 2011, there was nothing more successful in the history of the publishing business than the end of America. And I was on stage with them. I bet them. I won the silver coins. Remember the gentleman's agreement, silver coins. And you had essentially the greatest run in the stock market ever. And the concept was catering to what everyone thinks, because it's always the grass is sunnier on the other side. Yet when I came up with the Rise of America, it was the most contrarian view. And I'll show you one simple concept to prove that it was the most contrarian thing. The end of America did about $400 million in sales. Everybody thought America was declining, right? Okay. When I said the opposite was true, what's the opposite of the end of America? I don't know, the rise of America. Guess how much the URL on GoDaddy costed? $1. $1, the rise of America. So it just shows you from that basic point what a contrarian view it was, that nobody even bothered to even buy the URL for $1. So I did. And when you start talking about, since, in the last 12 months, what is the number one currency? The US dollar. And everyone today, especially the contrarians, are saying, Russia and China are going to create a new currency. Right off the bat, let's talk about the won is pegged to the US dollar. So that whole concept right off the bat is subject to the US dollar. So let's get off this whole US dollar demise. And being one of the largest investors and financiers in the resource space globally, I hear nothing of the, other than the gold guy saying the US dollar's down, gold's up. And again, like in my book, I wrote, no, that's nonsense. You can have the US dollar go up and gold go up. And here's why. And I can get into all the things why I like gold. And you don't have to be I hate the US dollar and I like gold camp, which is historically what people portray. But you look at the new alliance, even, Saudi Arabia saying they're going to observe the new currencies, this new Shanghai development. Observe, okay, great. You can observe a lot of things and not do things. And it is in Saudi Arabia's best interest. Saudi Arabia is full of cash, full of US dollars, full of US investment. And everyone's making a big thing about this, brokering of peace that China did between Iran and Saudi Arabia. Well, hold on a second. It's just opening up embassies. There's still so much to go through. And America's done that many, many, many times. So this thought that China is going to replace the US as the number one power globally, or the yuan will replace the US dollar, then why don't they just do one simple thing? Unpeg. That's all you have to do. And if at that point they unpeg, then let's talk. But they wouldn't dare do that right now. Then we get into swap lines and all these different aspects. So at the end of the day, when you look at the currency percentage of pretend the global capital pool and where the market cap of the Chinese stock market is versus the European versus the US, it is far, far from America being removed because it is the hub. It's not London, it's New York, it's US. The innovation and the technologies, you look at even from the vaccines to the tech sector, to even the resource sector. There's this misconception that, well, fracking, that changed the world. That was an American innovation. You look at from the uranium sector, all these innovations, the metallurgy from the mining side, the refining, nuclear, all these aspects never, as Warren Buffett said so great, America does best when its shoulders are up against the wall. Okay. And we have many examples throughout history that I kind of hint about in my book to make it a fun way. So, like yourself, I've traveled around the world for many, many years, and it was fun. And it's this kind of Indiana Jones concept. And after doing it for many decades, you sit back and say, wait a second, my biggest financial scores weren't in the DRC. They weren't in when I went to Iraq and had to travel with, armored former French Foreign Legion wearing body armor and bulletproof cars. Though it sells newsletters, it's not the right place to put your dollars. Then you start looking at places in the US and other areas, Canada's pretty good in certain parts, not everywhere. Australia, same. But that have never seen modern technology because, God created the gold, but the devil took it and spread it around the world. But when the commodity prices dropped down, most of the resource sector went to where the gold was, or the copper was, or where the uranium was, the low-hanging fruit. And now, as those governments want a bigger piece of the pie, you're seeing higher taxes, higher royalties, outright confiscation of these resources. Then they are claiming environmental reasons and they're going to take the money back. Look what's going on in Argentina. Then even if you do everything right, and now you have a mine in Turkey or Argentina, and you sell the commodity, can you get that cash out at the government rate or the real rate? There's all these things that I discuss in the book. And, it's easy to crap on America, and there's many problems in America. I'm not trying to say it's perfect, but try to go do business in Russia. Try to go do business in China. Do you know that there's many funds? I'm shocked in our world right now. They're not talking about all these funds that can't take their money out of Turkey or Russia or parts of China, parts of Africa. So, you're not going to have, I'm not saying that you want to go build a mine anywhere in America. There's certain places you just don't. And you get into different rules. Like, is it BLM land versus, private land? Is there a river that runs through it? Well, stay the hell away from it. Or is this a produced asset that has huge significant upside? So these basic logical concepts. And at the end of the day, you look at where's the infrastructure. When you go to a lot of these places around the world in the emerging markets, you're not going to get your permit until you build all of the requirements required to sustain the production. Or do you want to go off of existing infrastructure, which reduces your costs, the power cost versus diesel or building a grid? So all these factors we get into, and basically getting at how you succeed in all investments is sound, basic, fundamental principles that you're not emotional, you're not reactive. And generally, to be successful in that, you do have to be a contrarian. And in the gold space, people love that sexy story in some exotic land and how he rode a camel to get to this project. Yes, it sells newsletters, but is it profitable when you're trying to make an actual investment?
You mentioned swap lines somewhere in there, which just brings up central banks. We're having banking crisis, the banking crisis of 2023. and the central bank is caught between fighting inflation and rescuing the financial system. That's the Federal Reserve is equally the central bank of the world as it is for the United States, simply because it's the steward of the reserve currency of the world. Um, First of all, I want you to explain what a swap line is, because that keeps coming up during the banking discussion. So I think it would be helpful for people to really understand what it is. But then also, what do you make of um, what do you make of policy versus the rate hikes, like their
Yeah.
policy decisions versus their rate hikes, and how is that going to impact the commodities?
Great question. I literally just wrote this last month's article about this, but in the book, I introduced what are positive swap lines and negative swap line nations. So what a positive swap line nation is, there's 14 nations, or, if you include the EU 28 as one nation, but essentially from a banker's perspective, they are one bank, right? So the EU counts as one, but that have an alliance and an agreement with the US Fed, that the central bank of the EU or the Bank of England or the Bank of Canada, the Bank of Australia, um, the Bank of Japan, all these nations, Mexico, Brazil, there's 14, I lay it all out, and they can go to the Fed and say, oopsie, we need $1 billion in US dollars. And depending on the country, not all of them have the same interest rate. And it's kind of a lifeline. Well, there's 14 that get it, even though the EU is 28. Everyone else is a negative swap line because they don't meet the criteria as a true ally of the US. So you see just recently in the last 15 days, you've seen the EU and all these nations ask for massive swap lines. So the Federal Reserve has an incredible power and leverage. And if the US dollar wasn't the number one currency in the world, or even continuing, why would there be such massive demand for it? Remember, the US dollar is where it is because globally there's so much demand for it. Then we can get into the euro dollars and that whole other concept. Now, when it comes to the situation today, where, and just so you know, the swap lines go as 7 days and 30-day loans and 90 days. So you can get these revolving lines. And just recently, we've seen the big pop up versus where it was at the beginning of COVID. So America, when you stated correctly, is the central bank of the real first world global economy. Now, when you break up between fiscal monetary and the monetary side, you've got Janet Yellen and Jerome Powell trying to figure out, we had this mandate for interest, but the banks are collapsing because it's this house of cards, and they are in a difficult situation. So what can they do? Well, there's the legislation from a monetary standpoint. They can't bail out all the banks. And that's why Janet Yellen said, well, we'll take it on a case-by-case basis. But what they're probably going to do is fund whoever will take out the failing bank. Those failing banks will no longer get to have a second chance. What they're going to do is basically they're going to consolidate the ones who have failed into banks that can prove that they will survive, and they're going to back the survivors. That's how they're going to bypass the legislation gap, that there is no actual rule of law of how to go about it. Hence why she stated this, and she's the Secretary of Treasury, we'll take it by a case-by-case basis. Now, from a Fed standpoint, Jerome Powell is in a difficult situation because the stock market's still ripping. Inflation came in at 5.6 last month. So it still hasn't got to that 2% target, but he knows if he goes a little bit higher, Janet Yellen's going to have more problems too, backing more banks collapses. So there's this whole global, we've probably reached that point of maybe another 0.25 interest rate, and then they're going to see how things go. That's most likely either we've seen the peak rise for now, and they're going to see how it goes out for a while, but that's pretty much my interpretation of the situation at hand.
Yeah, that's what they call the terminal rate, right? It gets to a certain point where
everything blows up.
Yeah. Well, actually, the way they refer to it is not only does Fed policy slow demand, but also supply begins to solve itself.
Yeah.
That there's enough supply from the supply chains getting opened up, and inflation starts to tick down on its own.
The natural rate.
The
That's
terminal
right.
rate is when the two of them meet, and that's the question: is do we get there before the banks collapse? Yeah, one by one, I guess.
Yeah.
So, but the second part of that question was, does the turmoil? Yeah, I mean, I can't tell you how many articles I've read just in the past month alone from people who don't even usually write about this, about Fed policy and Jerome Powell and Janet Yellen, things that we're talking about right now. It's just been a fixation for most of the financial media, and readers of ours are also reading the financial media. It's just taken over everything.
Yeah.
So what happens?
Turmoil.
Yeah, it's turmoil. So what happens in the environment like this in the commodities markets? Well, one thing we have seen is gold has gone up 30% since November just on the spot price. So that's usually an indication that people are getting nervous about their stocks and they're moving their money. But
So
then also we have seen a rise. I think I calculated an 80% rise in Bitcoin. So that's another indication that people are trying to get out of the banking system. Um, but when you see this kind of turmoil, what do you think in terms of financing projects for commodities?
when they state getting out of the financial system, we have to look at all the volume of trade in the gold and the Bitcoin versus the amount of capital floating in the US dollars. And you'll see that, less than 0.2% of the global assets are actually invested in the gold. So we're talking about a lot of money, but in a relative basis, something almost very small. On the gold perspective, there's no doubt that, and the actual real price of gold, like if you go to buy from your dealer, a broker or pawn shop or whoever your coin dealer where you're trying to get gold, first of all, make sure you're buying, real gold. So be careful where you're buying it from. Secondly, the actual premiums to it are much higher than what the quoted spot price is. So that's something that is interesting. So for example, I'm very close with the largest dealer in Canada, and he phoned me up and said, I will pay you above spot to sell. Now remember, that's how the brokers make it. They buy from you below spot, and then they're just, they're transaction guys. And it's about the demand. So secondly, you look at, okay, where are the coins with the mint? There's big demand there. So that's consistent. Then you look at, what about the actual miners? Like, what is Newmont and Barrick and Agnico Eagle, the three largest producers? What's going on there? Well, all-in sustaining cost, AISC, is going up across the board because of these inflationary pressures. And unfortunately, at the mines, it's not like this is just a near-term pressure. You look at tire costs, which make up about 5% of the cost of production. The supply chain constraints and the cost to get them there, that's not going to go away. And then you have your actual labor costs, which make up about 20 to 25% of the cost. That across the board, specifically in the emerging markets, is going up at a higher rate of change. So you're looking at that. You can't now pay people less because you have, especially if you have longer term contracts. That's all creating higher cost of production. Then for the new guys who are building mines, and then the government, those costs are going up. Then in the emerging markets, you have the government's increasing tax rate, increasing royalties, delaying permits and delaying advances to expansionary projects, and then locking up the cash because they want that capital staying in the country. They don't want to bring it back to head office in New York. All these things are causing for gold to end up being a higher all-in sustaining cost. Hence, it's pushing up the natural rate of what the price of gold to bother with investing in this. Like, I'm not a crypto guy. I'm not the best to speak about that, but that's kind of what's going on in its own world. And you're talking about even smaller portions of capital to make that move, but the numbers are there, and it's not just Bitcoin that has seen that. And you're going to continue to see more in the emerging markets, what I call negative swap lines. And it's shocking to me because let me just ask you a simple question. if you talk about an asset, you're talking about net asset value of an asset. Why is the industry using an NPV5, so net present value at a 5% discount, when the interest rates are higher than that to be even discounted? And do you think that a project in Argentina, where dreams go to die, or Turkey, should be at the same discount value as something in, say, Nevada? But that's what the industry has been used to, because that's what the bankers do. And it doesn't make any sense. Risk has not been priced properly in the sector. And that's just kind of how it's been done with all of the institutional research reports, because what pays for the institutional research reports? The banking fees, the broker fees, and they just want to move this sausage through. So those are the type of items that you see why gold is doing so well and will continue to do so, because the governments and everyone has their hand out, and you got to keep the machine going.
I think you were referring to this, you were looking at this as a measurement of what you're talking about here, that you had tweeted, relatively speaking, commodities are the cheapest they've ever been against the S&P 500. And you threw a chart in there.
Yeah.
And when I write about this, I'll include the chart. But can you talk about that ratio and why it's important? The ratio between commodities and the S&P 500.
What it shows you is relative value. Like, if you take a barrel of oil or an ounce of gold coin, what could you buy it in historically versus today? And you're looking at where it's at. The market globally is undervaluing the commodities, yet you see the tensions building in the world. Like I discuss in my world, we are in a G2 world. It's the positive swap lines versus the negative swap lines. There's no doubt that this is going to continue. You look at what's going on with molybdenum, a commodity that most people can't even pronounce. It's almost doubled. No one's even talking about this. It's on fire. Well, why? It's a byproduct. And then you look at the industry supply chains, tungsten, wolframite, all these commodities, rare earths. You look at what's going on globally, and you look at where it's going on, and the US recognizes these critical elements. You look at what's going on in the battery sector, lithium, all these aspects. And part of the rise of America is America and its positive swap line partners. Remember, they view those as partners, as geopolitical partners. Japan is a partner with America, as is Canada and Australia and all the swap line nations that I've mentioned. They're going to be working together. So you see this offshoring from China to friendshoring or onshoring. That's going to continue. You're going to see the governments do just like what they did. And I have a whole chapter about this in the book, post-World War II, how the Fed would fund these development and advances, and how the Kaiser Empire was built, and other empires, very similar to what Elon Musk has done with US funding for SpaceX and the funding and the grants they got with Tesla. All of these things moving forward, and it's going to continue to do. So this concept that America's facing an enemy that it's never seen before, it's just a new version. And this time you have China and the Russians working together. And that was the vision of my first book, The Colder War. It's building up to this G2 world, and it's going to continue. And, Ukraine, as I said a year ago, is not going to resolve quickly. It's going to continue. And then the big one that, is going to be mentioned is what happens with Taiwan. And it's going to build to this boiling point. And of course, the world is going to line up on one side or the other. What's going to be interesting is, what does India decide to do? Because if you really listen, India is very clever. They're playing both sides right now because they want the best from China and the best of America. And that's what I would advise them to do. But ultimately, they're going to have to choose at one point. And people forget that a year and a half ago, India and China were in a physical shooting bullets. People were dying on the boundary up in the Himalayas. So that is something to kind of think about. And the Prime Minister of India stated, "We have US swap line envy." That was a quote. So he's very well aware. And just like Tito did in the Cold War, the Prime Minister of India is leveraging, China to get what he needs and wants from the US. And I ultimately believe India will side with the positive swap line nations in the next decade.
Another tweet I wanted to bring up which is also related but sort of tangential to this. You had written, "Wow, look at the soaring call option volume on SPDR Gold Trust ETF," and that is an example of, or it's benefiting from the rise in the spot price. But it's also an ETF is more or less paper gold.
Correct.
So was hoping that you would talk about this soaring call option volume, but also just talk about the difference between investing in mines, in spot gold, and also what we call paper gold or ETFs.
So let's start. If you're a retail investor, if you're an active where you're on the computer it all day, fine, you can get into your calls and puts. The average investor who has a job and has family obligations, I generally tend to advise retail to avoid puts and call options because you have to really understand what you're getting into, and it's a complicated trade. Plus, you're playing against institutions whose whole focus and funding is to manipulate and also play that at a much higher sophistication level. So when it comes to the ETFs, if you're looking at it, that you said the key phrase, it's paper gold. It's not like you can send in your shares and get your ounces delivered to your house. So let's separate that. But it's very liquid, much more liquid than the actual physical gold market. So there's something to say for the big institutions. It's a lot easier of a way to play short-term momentum in gold. So if you like gold and you believe in the longer term phrase, find a reputable gold dealer and go and basically purchase the physical gold and keep it, but you're not doing that if you want to buy and sell and move forward. Then you get into the miners. That's where the big gains, that's where you can become very wealthy if you pick right and sit tight. There's the exploration and the discovery side. There's the production side where you can get a significant upside on not just the commodity price, but if the deposit becomes world class. And generally speaking, that little pocket of what I just stated, where you want, a producing asset that is a lowest cost quartile in a very politically stable jurisdiction that has significant upside that you don't have to pay for. That is where we are in the first chart that you showed, because the market is so undervaluing the generally the whole commodity space versus the other assets, and not just the S&P 500, but look at real estate or commercial real estate, average 3-4% cap rates. Because of the higher cost of interest rates haven't worked through those systems because of the longer term contracts, we see the undervalue in the gold and the copper and the uranium. But the mute point here is by finding that sweet spot where you don't have to wait 10 years for a permit and crazy capex and 10 years to build it and take all these risks, and you're at the lowest cost quartile of production because you stay either super high grade or it's a really valuable porphyry. And then you bring modern technology to this significant upside. And if you can buy all of that at a discount to its NAV using 10-12%, that's how you make the big upsides. And you don't need $5,000 gold to make it fly. A $200 discount to current prices makes it fly. So that's how you want to position yourself, hence being a contrarian. I don't need higher prices. Where gold is today is fantastic for the right projects if you know what you're doing.
You referred to those call options or the spiking call options. Call options being you're betting that the price is going to go higher for the ETF. That there are call options on the ETF. We have to be specific about that. But the underlying value of the ETF is the spot price. You referred to it in your tweet as a gold awakening. And so I'm assuming what that means is that with the turmoil that's in the financial markets, with banking, and then all eyes on the Fed and all this Fed watching that we do, at the same time, people are beginning to realize that gold really is a good bet. And just looking at the gold chart, I've been doing this a lot because I've been writing my own material on it. But the gold chart, we started recommending gold when it was 253, and it just keeps going up through from 1998 to the current price, which is hovering right around 2000. And then there was a dip, like in the 2015 area, but steadily gold has been going up, and there are, like, a community like ours, we're aware of that, and we're playing the markets or whatever. But now it seems like there's a broader audience that are suddenly interested in it in a way that means to me that they're aware that all of the promises that they've gotten from brokers and money management firms and financial professionals, there's a greater degree of uncertainty there than I think I've seen, at least since 2008.
And that's a reflection of the overall climate today. And one interesting point that we should state, and where, I'm fortunate to know many of the CEOs, the top CEOs globally, and what are their boards saying, and what are their large institutional shareholders saying. They want de-risked assets that they have the rule of law, and when they're buying something, they know what they're going to get, and the goalposts or the rules don't change on them. So the key aspect of what we're saying here is, yes, gold's just starting to get its due respect, and the commodities are just starting to get its due respect, because everyone's kind of said, where does the gold and all of the critical elements for this battery or technology in your car that you just took for granted for all these years. But as the tensions are building up globally and there's a race for these resources, people are starting to awaken to that. And then what happens is, where's the smart money going? They want to bring modern technology to de-risk situations. And just like the fracking moment happened in oil about 15 years ago, we're just getting into the North American, specifically US jurisdictions that have historically been the greatest places on the planet for resources. And then, as in the late 2000s, when the world started opening up, you went to where the gold was, where it was cheap labor, cheap entrance fees with the governments because they were just emerging. And now that that's established and it's becoming more expensive to produce there, the big money, the Newmonts, the Barricks, the BHP, Rio Tinto, the biggest companies in the world. Newcrest is being, Newmont tried to buy out Newcrest. Well, why? Well, look at the assets they have now in North America versus why didn't they buy them out 3 years ago? Well, they didn't have those assets. So you look at what's going on, and that trend will continue. Keep it simple, keep it fundamentally based and value oriented, and ask yourself this: if I'm not willing to take my children to a place without security, why would I want to go invest in the long term there for my investment dollars that's for the benefit of my family? And I've been there, done that. Like, I've literally been in Kosovo with the UN soldiers back in 2005 when Mitrovica attacked when I was there. You look at what I had to go through in Iraq on the border in the Western Zagros mineral belt with Iran, with the French Foreign Legion soldiers and the protection. When we went to Somalia to drill an oil well, I was young, I was learning. It was 15, 16, 17, 18 years ago. But now, when you've kind of been there, done that, the US is the place you want to be. And it's so contrarian that gold bugs are like, are you crazy? But it's the US dollar is going down, America's crumbling. One block from where my office is, in the heart of the finance block, about 2 blocks from here, 1 block, is literally the Junkieville. Vancouver's turning into San Francisco too. Certain areas have huge problems, but there's incredible potential in other aspects. So you can't paint this whole brush, is what I'm trying to get at. And I can't emphasize how much of a contrarian play this is, and how much pushback I get about the rise of America. In fact, our book was #1 in the US, #1 book sold, #1 on Wall Street Journal, #1 on Amazon in all categories. But no mainstream media wanted to take it. The mainstream media being, CNN, Fox, the stuff on the radio that on the TV screen when you're at the dentist office, no one really pays attention to. Do you know why? Your message doesn't really fit our narrative. Oh, okay, narrative. That cue to me means I'm doing something right from an investment standpoint.
You're talking about rising prices, or at least an awakening of interest in commodities again, and the timing is right. If if it's low against the S&P 500, just as a tool to measure it. Can you compare that to post 2008, 2009? Because we did have a pretty good bull market in commodities between 2009 and 2012, 2013.
The so let me take you back to 2008 and 9, 10. I was heavily involved, literally from being a director and founder of the third largest mine built in Canada. I was the detail was though, build what China needs. The tension, the G2 buildup, where these adversaries, what I call the G2 or positive swap line nations versus the negative swap line nations, that wasn't clear at that point. That wasn't the thing. It was, we need to fund resources that China's going to buy. They're going to build these things and then we're going to buy it. Then go to today. That story is still true because China still needs to feed the dragon. But the developing world, you look at the bills, the budgets that are being passed for the rise of America, what you see for the increasing the infrastructure, improving, rebuilding, all of that is happening. That wasn't there in the 2008 to 2012 run that you're referring to in commodities. And we're just starting there. So you look at how the costs have gone up and so little capital has gone into the resources sector that once that demand really comes through and starts fulfilling, you're literally going to be in a situation where a company I recommended, Stelco, it's a great steel producer, went from $4 to $50. Tech Resources, $8 to $60. Kirkland Lake, $3 to $70. Those are and we're not talking about, matchsticks that just got lucky and found deposits. These were producers. They have cash flow. They're huge companies. So we're just entering this phase. And I would say why I'm so heavily invested, and not just in resources. You look at the carbon sector, the world is starting to awaken that we need stuff and not enough capital went into the stuff. And the people who are there, like the mining guys who've been there for 20, 30 years, they know where the quality is. So that's already been picked up. And those are going to see the biggest upsides. Don't get me wrong. In 5 years, you're going to have 100 new uranium companies, 100 new lithium companies, 1,000 new gold and copper companies. But at that point, that's the bottom of the barrel. You want to be early. And when the big tide comes, take a Katusa free ride, reduce your risk. It's all about reducing risk and let it ride. Let your free shares ride. That's what I see happening in this sector.
You brought up the infrastructure spending. That's always that sounds like another contrarian point of view that you hold.
Yep.
Just because the infrastructure spending is such a hot button issue and it's so politicized, but it's happening. I mean, that money is being spent, and it's going to go somewhere.
And I'm not saying it's all going to be efficiently spent, right? There's no doubt there's going to be, look, it's all governments. Like, who wants to be in government in today's day and age when if you're active, intelligent, you can make 20 times more for the same amount of effort and not deal with all the BS and the social media and have your family reputation and all that nonsense. So you're already in this whole global thing. That's where the emerging markets, you look at, in China, actually look at the net worth of the politicians versus the average entrepreneurs versus here. It's very different. That's why in Argentina, some of the richest families in the world or in the country are governors and all that. And there's a lot of that. Look at Pelosi. You can say the same thing about her husband's trading accounts. But the point is that money, even if a third of it goes into it properly, that's a huge amount of money that wasn't there in 08, 09, 10, 11. And we saw doubles and triples in the commodity price. Look at just uranium as an example. Uranium just with, a little bit of inflows tripled. You look at the high just before Fukushima was about $78. Just 5 years earlier, it was $15. So you look at all those massive runs, and it's still $50. Well, Poland just approved 3 new reactors. The US is going to have to divest from, their over-reliance on Russian and Kazakh. Remember, Kazakh doesn't have any of their own centrifuges. Everything gets done through Russia, which I talk in detail in my book about, if just a little portion of capital comes in, uranium at $100 is not some far-fetched aspect. That's a realistic situation. And do you want to be investing in Niger, in the Arlet Basin, where historically was really good? That's where Areva, the French, national company, got most of their uranium from. No, that's a huge geopolitical mess. I don't know. I'd kind of rather sit at permitted producing American assets because the American government will buy it off you. So, history rhymes. We've been here before. It's obviously changed a little bit, but this is the place to be.
Tell me about the Gold Rush project.
Project Gold Rush.
Project.
When we have so many subscribers, everybody wants to know, what do I buy? I've signed up. What do I buy? And I say, look, there's no shortage of needs of capital in the resource sector. It's a very capital intensive sector. Even the producers, the upfront capex and the ongoing sustaining OPEX is very high. And from blasting rock, moving rock, crushing rock, extracting the value out of the rock, sustaining the bonds and the tailing ponds, which is the worthless material that you got to hold somewhere. Those are ongoing expenses. Costs are going up. So after doing this for a long time, I kind of had this vision. When COVID happened, you ask yourself, well, how do I take crisis equals opportunity in Chinese, since they're the main opponent to the US? It's the same word. And I thought to myself, and after getting my wife on side, when every plane in Canada was grounded, every airline was grounded by law, mandated, nobody could fly anywhere. I went to see how we get a special exemption for work under a construction permit. And I thought, this is a great opportunity. And I came across two assets that had the title issues that were past producers on a major standpoint. We're talking world-class assets that, because of the history and the legal title, saw no modern exploration for over 30 years. That means all of the innovations we've had have never been seen. And no one's actually tried to do anything with these. So I thought, look, where's the best place to find gold? It's a known thing. In the shadows of the head frame is what's known in the resource sector. And it didn't matter, the biggest successes I've had, whether it was Kirkland Lake, Copper Mountain, Quadrilla, all these stories were assets that were produced. The industry's so cyclical, and you bring new technology and you build it up in the window that on the upside. So booked a plane, took my geos, my engineers, and we went and got these assets when everyone was stuck at home. And I said, this is an incredible opportunity. If you have access to the highest grade operating gold mine in the world that has never seen the technology to test the porphyry potential, that's copper, like world-class copper potential, and 40 miles north from there is one of the most valuable operating gold, copper and gold mines in the world. And the smelters there, you're talking about $10 billion worth of infrastructure today to replace. And they need the feed. That's probably a pretty good place to start, right? And on the other one was one of the world's largest producers, and the gold is still there. We went there and saw it with my own eyes, the infrastructure, where you want to go, and you get involved in these things. And because of what happened over the last 12 months, the prices of all the gold stocks are down because of the inflationary costs. And you can get into these stocks. There's two specifically that are world-class at a lower cost base than I paid for myself personally. And in one of them, my wife and I are the largest individual shareholders. And in the other one, I guess I'm top 5, I would guess, for sure top 10. And I've put up many, many, many millions of dollars personally in both at a higher cost base than what they're trading for today. So when people ask me, this is the first promo I've done in over 12 months for gold. And I said, look, there's nothing to buy. And now people are saying, well, what do you want to buy? I go, now you can get stock cheaper than what I paid. If you don't like it, don't. But start with people, incredible people who've done it before, who've sold their companies for billions of dollars, and they're the largest shareholders in their company. When I say I'm the largest outside investor, but the investors, the management teams themselves are the largest shareholders. Then you say they've been there, done it. They're not rookies at this. Their whole career was this. In one of the companies, he's only done 2 companies in his whole entire career. This is the third, and he sold both for over $3 billion. That's a pretty good track record. The other company built a top 10 gold mine in the world and sold it not on their will. They got a hostile takeover bid, and investors made many billions of dollars. This is their second go at it. So you always start with the people. Then you start at the project. You look at the risks. It's producing, it's permitted, significant upside. And for your viewers who want to see this, I went and got independent experts to get their perspective. And one of the most cited geologists on the planet who all the majors know, this individual on the show said it's one of the most prospective targets globally right now based off of the porphyry potential. And he doesn't think that it's a risk that the porphyry's there. The only thing we don't know is what is the grade of the copper that is in that porphyry formation. And there's only one way to find that out, is drilling, and the company's going to be drilling there. So they're funded to do so. So, and then you want to look at, you don't want debt. You don't want, them to need the capital to go in the market, because these guys know how to build these things. So you de-risk these assets. And essentially, it's my way of telling people, here's 2 stocks that I'm heavily invested in. You can buy them today at a price lower than I paid that have significant upside. And when people look at it from a perspective, I'm going to share a story about Kirkland Lake. Kirkland Lake became the #1 gold story. It got bought out because of Fosterville. I was the first guy to publish the potential of Fosterville in 2015. It's on my website. And I said, this is going to be a 400,000 ounce gold producer. I was mocked in the industry. People said, what the hell's going on with Marin, blah, blah, blah. So I bought 10% of this thing. And it went down 50%. I looked really wrong for about 9 to 12 months. Then the numbers came out, the grades came out, and I was wrong. It didn't produce 400,000 ounces. It almost produced 1 million ounces a year of gold. And the stock went from $2 to $70. That's the type of, and this wasn't some little exploration company. It was producing a lot of gold and in a very stable jurisdiction, historical production. And they just started getting into using modern technology. So this pattern, you can see significant raises. But that window of 9 months reminds me of where I am in one of these. And this is my next Fosterville. The grades here, though, on this one company that's in of the 2 in Project Gold Rush looks better to me than Fosterville.
You say you're moving in silence on this. What does that mean?
What I'm saying is, I met with some of the largest funds in the world. Specifically, one where I got the idea for that was one billionaire is going, why are you so hot on this? I just don't get it. And when I shared with him the porphyry potential, he said, I didn't know this. I didn't hear it. I go, well, it's there, but you just have to understand the district and the geology. And he goes, holy shit, no one told me that. He goes, get out of here. That's there. I said, oh, yeah. His geologist, who's an award-winning geologist, a well-known guy, goes, I didn't know that either. So when we came up with that, we're moving in silence, because of the suppression in the industry, people are just kind of, and I don't think it's just in the resource sector. I think investors in general, they're overwhelmed right now. And the banking crisis and the interest rate shocks and what's going on with everything. People are kind of paralyzed, and they're stuck in this analysis with paralysis via analysis, and they're not looking at other ways of what's there. And when I shared them the video and the potential, it was as if I was the only one aware of this, and the management team want to focus on the asset rather than promotion, because that's who they are. They're mine builders on both of these stories. So I don't like exploration. It's risky. I try to avoid geologists with a box of crayons, because that's how they interpret stuff. Yes, it works, but maybe 1 in 3,000 shots will pan out to a real profitable economic discovery. I like going to places that have been kind of forgotten about, never seen technology, and you're moving in silence.
If people are interested in Project Gold Rush, where do they go?
Well, go to the link that you have there because it'll benefit you to get that. And it all goes to my website, and you can watch the videos. You can look at, the on-site research, the photos. We go pretty detailed into it, and there's not going to be a shortage of material for people to watch or view. And then you also get to see everything else I've written and look at the stock picks. So you look at where I believe the sector is going. This is a great time to get into. And it's not me saying this. The banks have written the largest banks in the sector have written their own independent NAV valuations, and these are all trading less than 50% NAV. That's on the current known resource. You get all of the upside, like that porphyry that one of the richest guys in the gold sector didn't even know about, for free. You get all of the other deposits. This thing has 21 mines in this district, and they've only looked at one of the 20 shafts, 21 shafts. They've looked at one. You get all of that for free. They have a feasibility study on another past producing asset that you get that for free, because right now they're just focusing on the value of the known gold resource. That's what I meant by buying a quarter for a nickel. You want to buy $1 for 25 cents and get all of the upside for free. That's how you get success in the resource sector.
All right, Marin. As always, it's a pleasure to talk to you. Thank you. And we'll make sure that people take a look at Project Gold Rush.
It's my pleasure. Thank you.
All right.